All right. So, you guys know why you're here. You're following on Instagram stories at Gustavo Zaps, and many of you have sent me messages about how you were selling on gold. Selling on gold. Um, there's been a lot of questions about why I continue to buy, and my answer is going to be pretty simple, as they always are, because I believe in keeping trading simple. I do not like to complicate things so that I can seem above anybody. Right? I like to be honest about the way this goes. And many people who are out there and will tell you about um, trading and they're actually profitable will always tell you to try to keep it simple. They may be singing a different tune. They may be entering the market differently, using different technicals, different patterns, but they keep it simple and centralized on what it is they do. That's the important part. What is it you do? What is it that you do systematically and continuing to do that over and over and over again? So I have my way. There's going to be another guy out there who has their way. The important part is what you understand and being able to execute that over and over and over again. Because as I tell my students, as I tell my private students, as I tell my community group members, if you can't keep it simple, how the hell are you supposed to do this day in and day out? If every trade is a roller coaster, how can you survive in this market for the next couple of years, for the next 5, 10 years? This is supposed to be something that you're building for your life, right? A skill set that could pay you throughout your lifetime, ideally. No guarantees, but ideally, you're going to build the skill set. Some of you out there, somebody that's watching this right now, has the potential of doing that one day. Okay? It could be you right now watching this. It's going to take time, it's going to take process, but eventually, no matter who's coaching you, who's teaching you, whether me, somebody else, I don't know, YouTube video, whatever, it doesn't matter. The potential is there for it to happen. But it's my opinion and the opinion of many out there that if you cannot systematically execute the same things day to day, keep it simple on every trade that you take, have rules, have things that you can always go back to when you need to kind of step away from the charts because things are a little rough, that you cannot survive in this market if you don't do those things. So let's take a look at gold. We're going to keep this as short as possible. Sometimes you guys like the hour-long videos. I personally think they're too long. So we're going to aim for that 15, 20-minute mark, or maybe less. You know, it is Friday. So let's talk about it. Gold. You know, if you've been following and if you look at previous videos, you know that I've been buying gold for a while. This isn't something new. I've been buying gold since down here. You see that markup? That is where we started buying gold. This is back in April. All right, and I have trades from here and here and here. Anywhere where you see a markup, it's somewhere that I've been. That's why I keep them there. It reminds me of what I've been doing because I don't just mark up one chart. I got a lot of responsibilities when it comes to the market. So when I look at the market, let's talk about the last couple of weeks. July 4th was the last time that I was selling on gold. July 4th, right here, okay? That's the last time that I stopped trying to sell gold. Ever since then, I've been buying and buying and buying again. Now, there was some series here with some strong buys here and here. There was this moment where the market actually took me out, went under my price. I didn't do anything with it and then started scaling itself all the way back up. Now, we caught up with it. We caught up with gold, continued to buy. I have not tried to sell gold because, and this is going to be important for many of the beginners out there, you cannot get lost in the fact that the market, that you drew up a resistance line, that you drew up support and resistance, trend lines, whatever, your indicators, something on your screen is telling you that the market has to stop. You cannot justify a trade based on something that you decided to place on that screen, whether indicator or markup. You can't. That indicator or markup is only telling you one thing: to pay attention and decipher the details as they are created. So when you get out, when you go for the reversal, you better be damn sure that it's time tested, justified as to why it is you're about to take that reversal. So our personal belief inside of the group and my personal belief as a coach is the reversal is never plan A or B. It's plan C, D, maybe E. Okay. Also, you got to look trend first. Now, I have this mentality where I don't believe in a lot of the cliche things people say. Trend is your friend. I think it's a very vague thing that people like to say. There's more to it than trend is your friend. I believe that structure is your friend. Uh, Bias and the placement of that bias, that's your friend. So let's talk about the current markup that we've been working, okay? A couple of weeks ago, you guys saw on Instagram stories, if you do not follow me on Instagram and you want free value, this is what I give out all the time on Instagram and Instagram stories. I do my best to give something out every time that I'm out there humble bragging. I don't hide from it. I know I'm humble bragging. I know I'm pounding my chest. I'm not hiding from that. So basically, while I do that, I also try to teach you something. I also try to teach you that you need to be confident in your own trading and stop worrying about what somebody else is doing. If you're trying to become a trader that can maneuver through this market successfully, you need to have the confidence to trust in what you know and execute your bias and your plan based on what you know. So let's check out this market. Okay, so before we get into it, we got to talk about the psychology of things, okay? By the way, this is shout out to Logan, man. He's leveled up. He's leveled up. Period. I mean, if you want to know what Pipsology FX can do for you, go talk to him. Go talk to him. If you want to know what working with me, Pipsology FX can do for you, go talk to him. So, and this is not a real pattern. This is me joking around because market's closed and we could do that. So, in order to know where the market is going to go, you need to know where it's been. This is a Forex 101 thing. The market works in these very key structures. It only has so many movements within it. You just need to be there to take the movements that matter to you, whether you're a 20 pip trader, 50 pip trader, 100 pip trader, 7 million pip trader. You need to find a way to justify that type of volume and liquidity in your trade. So we're going to focus on what I'm looking for, which is that 1 to 1, 2 to 1, 3 to 1, 4 to 1. Anything after that, risk to reward, I don't care. Right? I don't care. If it happens, it happens. But honestly, the way that I start my trades is always the same thing. A minimum of 1 to 1 and then 2 to 1 risk to reward in this scenario. That's what I'm looking for. My management through that. If you guys follow me on Instagram, you already know. If I'm 1 to 1, I'm paying myself something. Because if I spent the time to do the analysis, if I spent the time to put in the heavy lifting of learning this and then being good enough to mark it up, also enter, manage through, get it to profit, yeah, I'm going to pay myself. 30, 40 pips, I'm paying myself something. 2 to 1, definitely paying myself. 3 to 1, definitely paying myself. Because at that point, we're talking 100 pips. All right, so here we go. All right, for a while, we were buying from a very similar situation. Like, this is something that over and over and over again, okay? The market started showing that first sign of bearish last week. We even opened the week with a quick impulse under the area where we were buying. So this trade got +1 because obviously if we're in a trade and it's up 60, 70 pips, I hope that you're protecting your entry or doing something so that if this turns into negatives, it's not totally hurting what you've already made. But anyways, for me, it's a +1. Take that stop loss, put it in the +1. It took me out, and then I found out quickly that we weren't going to be able to buy from that position anymore. It was a very different situation than what was going on before. So we fast forward to August the 18th. My bullish gold bias and markups are not going to change to start the week. Everything remains the same as we have not left our same structure. This was 6:17 p.m. on the 18th. This was the smack in the opening of the market. And, we started working. So gold ends up dropping. Gold ends up dropping straight through with a very obvious bearish situation. So the only other option was to look for entry from the last place where I entered previous, which was here. So when the market gets there, now let me clarify this real quick. Here's something you need to understand. Obviously, it's not as simple as, look, we bought from here and boom, we're doing it again. I understand that. But we're not going to get deep diving into technicals and the different things that have to run through your mind about when it comes to trades. let's be honest. We only got like 20, 30 minutes here. I put out a video once every 3 weeks, and the stuff on Instagram stories happens pretty much weekly, every other day, stuff like that. I like to mix it up too. So that's where the coaching comes into play. That's where your self-education comes into play. That's where the group comes into play. You know, you start talking about these things that you start to piece together like different weapons in it, so that you can start using them in your battle versus the market. But this right here, this concept that we keep talking about, this concept that is a huge part of my trading, is the simplicity part. It's a huge weapon that I have for my trading. Keeping it simple allows me to navigate through the market. You have to understand that the market is consistently moving. So I only wait for certain things. I don't care what happens in the middle. I don't care what happened up here. I don't care about 15 pips. I just don't care. It's not part of my trading plan. I'm not saying that it's wrong. I'm saying I don't care. And in the beginning of this video, I told you, you got to know what your plan is. You got to know what matters to you in this market. You know, if I'm looking for a 60, 70 pip trade, I got to understand where I got to get in from a place that can provide that type of fuel to my trend. So to me, if it worked once, it should work again. The question is, why? Why should it work again? What am I justifying to make me understand that we can remain bullish here? Why isn't it a sell? Many of you were looking for a sell because double high, right? And the market was finally looking bearish. It broke the area where you were once looking for a bullish play, right? We were looking for bullish here too at some point, right? It even came back and messed around and created more bullish structure. But finally, that's it. Enough is enough. Many of you at this point thought, well, this is it. This market's been so bullish. We're definitely going to tank. Wrong. There is nothing there that tells you that it's tank time. There is nothing there that's saying we're definitely going to tank. Let's go back to here. You see this right here, this huge dagger? A lot of people use that. I've spoken to many of you that are currently watching this video because I like to do that. I like to know where people's heads are at. Right? When they mess up, it's good for my coaching. Even if I'm never going to coach that person, or they're never going to join a group, everyone kind of goes through the same hurdles. We all fall into similar categories. So it's good for my coaching. You had that huge dagger drop and the market immediately popped up. There was no entry here. This thing was just too crazy. But later in the group, we called for support, right? We called for here. We called for the market to exhaust all this craziness and just chill out, and then we took the buy, nice and clear. These became much easier to take, right? If I'm down here already, and I know this held this whole shit, this whole bearish situation, I know that this price was strong enough to hold that up. I know it was, because I could see it. Why not try it again is the question. Why make it difficult? Why choose buy over sell? That is the main question here. Now let me justify that to you for a second. When we go back to the chart, if I go to that daily frame, the market is 1,000% bullish. No doubt about it in my mind, the market is bullish. We've been buying for a while, and even if you weren't, all you got to do is look at it, and it is bullish. It is bullish. The market is respecting the levels that matter on the higher frame. So over time, you're getting the respect of the market. Over time, not an H4, not a 3-day move, but a 5-day, 6-day, 8-day, 20-day scenario is bullish. Is bullish. To the point that not even this major drop caused off of news. News caused this. Not even that was able to take this market further down. Not even that was able to close it all the way bearish. It still closed with weakness to the downside, strength to the upside. Bullish. With bullish future structure. So when we took that trade from here, When this market came back, same thing. When this market came back, same thing. When this market came back, same thing. Now let me tell you something. I love the H4 chart. It's my favorite chart. Weekly, daily, I've shared this with you before. Weekly, daily, H4, and the H1 so I can get sexy on the chart. So I can get that good timing. This is something that many people do. But knowing what people do and you actually executing it correctly, two different things. That's why training is step one. Your experience points, your hours on these charts, working the same strategy that you know works, working the same mindset, working the same tools and weapons that you know works is critical to your learning process. Training is one thing. Education is one thing. Knowing that it works, that's the next thing, right? Getting that concept proven. Okay, this actually works. This is getting me results. And then finally, experience points, man. Experience points. So the market, right? Here, boom. Here, boom. Right? So we started here. First buy, 100 pips. Second buy, 50 pips. Maybe you missed it. Market comes back, about 150. Okay, so we took those 3 trades. I am that type of trader. If I'm up 100 pips, I pay myself enough that if it comes back, I don't care. I'll just do it again. And then when it goes up again, I pay myself a little again. And then it comes back plus ones me, I do it again. And then it comes back plus ones me, I do it again. And then finally it comes back plus ones me again, I do it again. This isn't fast. This isn't fast. The fastest one here is this one. Is that one. But by the time it did this, I had already been through this stance here, 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 here. So here I'm like, all right, no problem. We'll do it again. And then when it comes back, this time I was singing a different tune. I'll be honest with you. Because I started to worry about the lower highs being created in the micro market. And I'm like, okay, maybe they just don't have enough to push it up. I never left my bullish bias. So I felt that maybe we may get the slight chance of a lower low being created, which was going to mess it up for the nice entries because I don't like drawdown. I don't like to give away drawdown. But once the market, like I said in the group, let's take it up. Scroll, scroll, scroll. Sorry, it's a lot of setups that we give out, Jonathan and I. So, yeah. Okay, gold re-entries are up 60 to 70 pips at a max of 100 to 110 pips. That was yesterday. This week we've hit buy from the same zone 3 times, reminding you that we continue to do the same thing. And 100 pips during these re-entries, the market has obviously ranged consolidated. The only way to get in from a zone that many times is to be stuck between structures. There's some new data to take into consideration, which was that micro bearish channel that I'm showing you there, that downside channel that you see there. So this is my thought process going forward with gold, and I purposely made the video a bit longer so that new and old can understand. We plan for scenarios of the market, hold our bias, and move forward with trades. This part right here. Hold our bias. Trust our plan. Worry about what you got to worry about. Stop thinking of the market as this thing that you have to tame like a wild beast, and just worry about the one part. Okay, you know how I learned this? You know how I figure this out in my brain, in my trader brain, in my Zaps brain? I think about the way that an alligator or a crocodile, when you go to the aquarium or the zoo, and there's somebody that has to like tame it or close its mouth. What do? They worry about the eyes and the fucking head, right? They get over it and just worry about the head. They're not worried about the whole animal, right? Once they get over the animal and they close its mouth, they don't give a shit about shit else, all right? So stop worrying about this whole thing and start worrying about the things you can control, the things that can actually be controlled by your trading plan, things that you can hold yourself accountable on. Too many of you out there got too much shit going on. There's too much stuff going on in your trading plan. You use harmonics, you use pivot, you use technical analysis, you use Fibonacci structures, extensions with harmonics and trend lines, and you catch 5 pips. You did all that for 5 pips. You did all that for 10 pips. You took yourself out of a 100 pip trade after waiting 3 days. And then when you see that 100 pip trade is on the move and it left you, you're looking for a way to get back in. And maybe the complex scenario that you just ran through now can't be done again. So what do? You say, fuck it. And you jump back in there. and then you lose. There's no consistency. I don't care what anyone uses, right? If they work with me, obviously we're going to shift them to what I do. But anybody out there who uses something that they believe in, cool. I never tell somebody that doesn't work. It's not my problem. It's not my problem or concern. I tell them, if you can use it consistently, have a ball, right? If it's working for you, enjoy. That's it. That's what I tell them. So when I look at gold, obviously I'm telling them, look, I've been buying. This is all I care about. I don't care about selling. I also told them, look, in order for me to sell, I need a strong test of a low price. And I need a return to market. I need more than one confirmation to call this a sell officially, right? At that point, that's what I was doing. In order for me to sell, to even think of hitting that sell, I needed the market to go bearish without me. Did I just say I want the market to leave without me? Yes, I said that. It's important. Think about it for a second. Most of you get in trouble for trying to jump the gun on the market, for trying to get in before it's even given you any kind of information telling you, listen, we're starting to go bearish on an H4 chart. We closed the day bearish. We closed the week bearish. Most of you don't even wait for an hour candle to turn you into if it was gold, into the opposite side of the market. You don't. Most of you would have gotten caught right here. That's the truth. Right there. Right here. Right? Why? Because you look left, you see the high, you're like, last time it was here, it went bearish. It's going to happen again because we're bearish this week. And boom, boom, boom. Rape City. Right? Right there. Boom. 226 pips. What else do? You add entries. Okay, maybe it was here. Maybe it was here. You add an entry. Oh, no. Maybe it was here. You add an entry. I'm going to fix this bad one. I'm going to fix this one. I'm going to fix this one. And then I'm going to fix this one because it's going to tank. You don't know that. But you know what you have done? You've totally shown yourself that you have no plan, that you do not trust in your skill set and knowledge in the market. There is no plan. You never planned for a sell from here. You never planned for a sell from here. You didn't confirm any of this. You didn't confirm this. You didn't confirm this. You didn't confirm this. Let me show you. See that breakout situation there? Let's go to my little group here. Gold has reached the 100 pips of profit mark. I removed one of my 2 entries. I had a double entry down there when I first entered gold this morning, which leaves 1 entry running, okay? If I would have had only 1 entry, which is most people's normal scenario, this is where I would have skimmed it down 50%, taking partial profit. I don't change that for anybody. You know why? I like paying myself. You know why? I know there's going to be another trade. You know why? I don't care about the home run. I care about singles, doubles, triples, and the occasional home run. I want to go to the Hall of Fame. You play baseball, you know that Hall of Famers are the ones who actually make contact with the ball, not the ones who are striking out 2,000 times and hit 30 home runs a year, okay? So with this, I think of it that way. I just want to worry about paying myself in every profitable, positive situation that turns my trade into a one-to-one. If I risk 30 pips and I'm up 30 pips, I'm taking a chunk. If I risk 30 pips and I'm up 60 pips, I'm taking a chunk. And if I'm up 100 pips, I'm definitely taking a chunk. Now, there's some management in there. You know, the momentum of the candle, what candle is actually on the move, the type of style of the way it pushed away, the pattern that happened before, if it's a Fibonacci level, if it's working off a trend line. These things justify how much we take out, right? Because you don't want to take out too much, but you want to take out something. You want to allow the market to maximize the situation for you. You don't want to think for the market. So when I see stuff like that, all right, we've reached 100 pips. I'm out of there. 1505 has been the problem all week for us, the buyers. So locking profit gives me peace of mind, and now we'll allow the market to do whatever it feels like. New entries will only happen from the break of 1508, 1509, meaning we had not broken that price yet. See it here? We are far from 1508, 1509, which is right here. We're down here. I'm up 100 pips. I'm happy. I'm not worried about squat. You know what I'm not doing? I'm not trying to replace that entry I just fully TP'd. You know what I'm not doing? I'm not thinking with greed, baby. You can't do that. You can't worry about getting it all, because that's how you end up getting nothing. That's how you end up micromanaging your way out of a great trade, not entering the trade. You tell yourself you're a little scared. You don't even think of lowering your risk. That is not even a possibility in your brain. Many of you out there, I suggest that all the time. Hey man, if you like the setup and you're trading at $5 a pip, $1 a pip, trade at 50% of your normal risk. What? Are you crazy, Gustavo? But then I won't make XYZ money. And then guess what, brothers and sisters? You don't make squat because you're scared of the loss that's impending. I tell you, control your risk to reward ratio, control your risk management, lower your risk. Because right now, if you take that 40 pip hit that you're looking to trade on, that thing's going to chunk out 60% of your account. Are you a maniac? I mean, I know people do it. I don't do it. I don't like how it feels. I don't like the roller coaster of the market. I suggest that to people out there. They're like, yeah, but I want to flip this account. Then go and try to flip it. And guess what happens? A week later, one trade wiped out the whole week's worth of work. It's just the way that I approach the market. Doesn't make me right or wrong. Doesn't make you right or wrong. But I believe in what I believe in because it's gotten me results. So when I look at this market, I removed one of my 2 entries at full TP, which leaves one entry, blah, blah, blah. 1505, 1508, 1509 is where I'm going to get in. Okay, let's check it out. Where's my entry? 1509, baby! 1509. 1509, the break of the high. I believe in the momentum of this market. I know how I got in. We're not getting into that about the micromanagement, the micro market situation there, but just know that I wanted 1508, 1509 to break. We were down here when I already knew that I would get in from up here if it happened. Notice the specific price point and where I got in. I didn't get in up here. I didn't get in down here. I didn't get in up here. Nah, man. No, I control what I do. It's my hands that push the button, nothing else. No one has gun to head telling me get in. But some of you out there act like that's the case. So you get yourself in trouble in this market because you're getting pushed around by your emotions. You're not even thinking. You're not even thinking. You know what else I didn't do? This has been covered in previous videos. I didn't turn this into a sell. I didn't take myself out. No, I'm bullish. I'm bullish. This market on the H4, this candle wasn't even closed. And if the candle ain't closed, it isn't official. So I let it close. I took my profit down here. I'm good with whatever the outcome is. I let my other one run, and this thing just kept going and going and going and going and going and going. Guess what else I didn't do? I didn't take myself out on the change of the H4 candle. If I go to the H1, this market, whoops, let's go ahead and 15. This market gave a nice little, quick little drop. These little drops that happen in the market, okay? Doesn't matter to me. Doesn't matter. I'm already cool. I already took profit. Doesn't matter. Oh, but you're up 300 pips, and what if it comes all the way back? Trust me, if that was to happen, I took a huge chunk out of what was running. Trust me that that's the way this works. Because I've learned my lesson from the years of thinking that, oh okay, I'm up 374 pips. This thing is gone. I don't got to worry. I'm not even going to move my stop loss. I'm not even going to partial out. And then squashes your whole game. Your whole mood is destroyed by one candle. You do not want to fall victim to the things that happen in this market because of your poor management and poor planning. What's the more? We've talked about a lot of things in this video. What's the moral of the story? Your plan. Your plan. Now, I can't tell you how to break down the chart because you may not be a student. You may not be under my under the community group, under my tutelage. But I can tell you one thing. No matter the system, the style, what you use, planning is critical. Sticking to some rules and some habits that you can rinse and repeat. Notice that we talk about the same things. If you follow me on Instagram, man, you already know. You already know I'm big on partial profit. I'm big on plus oneing. I'm big on not worrying about market prices and zones that don't matter to me. I'm big on technicals. I'm big on rules. My people know. Yeah, okay, cool. The market goes up 130 pips. Great. It comes back down all the way. Why didn't you sell it? You know what my answer is? I didn't want to. That's my answer. I already know that it's a possibility. How do you know that I know that? I partial out. How do you know that I know it's a possibility of it coming back? I partial out. You know what? Here's the funny part. It's always a possibility. If you don't learn that, today, I didn't do my job. It's always a possibility for the market to cancel out what you got going on. Don't fall victim to the possibility. Make yourself bulletproof from the what ifs of the market. Oh, but I might not get my whole profit. We've already had this conversation. You're never going to get the whole profit. You're never going to do it. You're never going to do it. It's impossible. You just want it. It's not possible. It's not possible. No matter your style, you will always leave pips on the table. Always. Because while the market is coming your way, that's somebody else's opportunity. And when the market is going your way, somebody else is falling into drawdown. All right? So don't worry about all that. This is what I want you to do going forward. You plan for every single trade you take. How many pips? What's your risk management? What's your risk to reward? At what point am I going to scale out? At what point am I going to start really looking at TP? Where am I going to justify my trade? What are my if you use indicators? What are my indicators that I'm going to leave on here for the next 180 days? What's my strategy? If you watch whatever coach online or in your business that sells Forex or whatever, man, who am I going to follow for the next 180 days? No matter what, I'm not going to veer off. This is what I'm going to do. I mean, I could be hurting my business right now by telling you this, but it's true. Find some sort of consistency you can latch onto, because that's the only way that we can take a trade like this one, like this one, like this one, like this one, and like this one. Okay? There's no overthinking there. It's a plan and a rule-based thing. So, last thing, because I just saw on my phone a good question about gold. I mean, they're coming in today strong because I know a lot of you got swallowed up by this market on this bullish play. Many of you, it's what I talked about. You add these entries to fix bad entries. That's a no-no. You don't do that. You don't do anything that you didn't pre-plan for. You don't fly by the seat of your pants. That's my belief. Not everyone's going to agree, but you're here to watch what I think, right? I don't give a shit what anybody else thinks. You're here to watch what I think. And yeah, people don't like when I say that. I don't give a shit what anybody else thinks. I want you to think that way. You know why? Because the only way for you to trust your buyers is no noise. No outside noise. Just what I got to do. What if you were selling this week? You had some good sells. The only way I was able to draw this right there is seeing lower highs. If you use a lower frame, like an M15, you're probably really seeing these nice and clean. You know, maybe you were in from up here. Maybe you took that huge sell, right? The sell is strong. 300 pips, man. You can't be mad at that. You can't be mad at that. I have group members who took the sell here. Cool. I don't care. It doesn't make you wrong or right. What matters is, what are you going to do next? What are you preparing for? What are you preparing for? Now, if I go to the H4, my favorite chart. This is the last little point on this, and then we're going to call it a day. If I go to the H4 and I look at it, just look at it. Notice I don't talk about price. I don't try to keep it complicated. The reason is the conversation today is about simplicity. So just look at the candles, because that's the data. And I believe in price. I believe in quarter theory. I believe in a lot of different things that run through the back of my mind when I'm trading. Trust me that I'm not disrespecting understanding the right side of your screen. I'm not disrespecting it. But we're talking about a very specific topic right now, which is simplicity and planning within your simplicity. If I look at it, I can see obvious support here. I can see that the market lost strength on the downside and supported there. I can also see that there's been obvious support here prior in this market. Okay, I could see it here. I could see it here. Why not do it here? Now, with my mentality, I have a safe. I'm somewhere in the middle, safe and aggressive. It seems aggressive, but it's not. I'm safe as safe can be, because I wait for the market to create in the areas that I've deemed important. I wait. I sometimes wait for the market to push away without me. do it the first time, and I'll get in the second, third, and fourth time. Sometimes what ends up happening is the market leaves without me and never comes back. It's cool. You know why? Because we will plan to figure out a way to get in with the continuation. Example one is this one. The market went and then pops up for 200 pips without me. I'm not in there. I'm no maniac. I'm not getting in on that. I mean, I know some people may. I had this marked up beautifully, structurally, all that good stuff. Nope, not doing it. Not doing it. Oh, but Gustavo, it just moved 200 pips without you. Who cares? Because if I go to GBP, NZD, AUD, USD, Euro, GBP, they all moved tons of pips without me. I don't care. Why do you care? Because you're staring at the chart and you need to make money now? That's what's getting you in trouble, that mentality. This isn't poker. This isn't blackjack. This isn't sports betting. It's trading. You can plan. You can minimize the variables. You can minimize the surprises. All right? The market creates this obvious structural point. The sharpness of this entry doesn't matter, right? Here, don't worry about that. That's a Fibonacci on a lower frame, a conversation for a different day. That's a lot of other things on a lower frame. That's me like really nitpicking the scenario, which I like to do sometimes for myself. All right, but if you were just looking at it from a point of view of somebody who's bullish, market shoots up 200 pips, we are obviously still very much alive on the macro view of this market, which is bullish. Bullish strength. Buyers got the market by the balls when it comes to gold. Okay? So when we get back here, we know that. So when the market shows, listen, buyers are still here. We're still strong on this chart. Don't get it twisted. And then we pass, how many hours is this? Roughly 15 hours of not breaking back below that price, staying nice and firm above it. That's a lot of time. That's 16, 15, 17 hours of, hey, you going to get in this or what? Now the question becomes, but what if I'm wrong? What if you're wrong? It's one trade. It's one trade. What if, well, the question becomes, yeah, man, but I don't want to get stopped. I use a 20 pip stop loss and I've raised 50% of my account. That's your strategy. I see flaws in it, but if that's what you want to do, cool. Whatever. It becomes tough to enter stuff like that. That's why I don't believe in it. I believe in, you guys have seen me flip accounts. I've done it. 200, 1400, 300. I've posted these videos before. They're online somewhere. You go find them. 300 to 3,000 in the same week. I've done different flips, and yeah, that's breaking a lot of the rules. But that comes with skill set. You do not want to be that guy trying to flip accounts, not understanding what the hell you're doing when it comes to basics. That's the easiest way to give money away to the market over and over. All right? So try this. Try lowering your risk. Try making your trade not matter whether you win or lose. If you have a $1,000 account, try using some micros. Just try it. If you're a beginner and you funded your account with $1,000 and you're live because you don't want a demo, I'm not your mama. I'm not here to tell you otherwise. You know if it's right or wrong for you. You know it. You know what the rules are. You know it. You understand. But I'll tell you this. Try some micros. Go in at 30 cents a pip. Make it irrelevant whether you win or lose. See what happens. See what happens. See what happens if you enter down here and you stop watching it and breathing down its neck. And you wake up the next day and you're up 275 pips on 40 cents, 50 cents a pip. See if you're still whining and still upset about not participating in these trades. See if it's not easier for you to enter on this market. See, a lot of people out there, social media is messing them up. They want to have all these cute screenshots about how much money they've made and stuff like that, which is exactly why I don't talk about it. I give a glimpse here and there. People know. If you pay attention, you know the numbers that are being made, but it's not what I care about. I care about the pips. That's what I care about. I care about my consistency. I care about if I say, look, when this breaks 1508, 1509, I'm in there. When this thing comes back, I'm in there. If we get a stall to London or New York, I'm in there. Period. If we retest, I'm in there. I partialed out. Period. I TP'd. Period. That's what I care about. That's the skill. I can tell you what I'm going to do before I do it. That's the skill. Making money, come on, man. Come on. Let's be honest right now. What gets you in trouble is you're worried about the money before it's even time for you to start doing that. Get the skill set first. Try it this way. Plan. Make it motionless. Lower that risk. Have a plan. Say, look, when the market gets down there, I'm going to wait an hour, 2 hours, or whatever system you use, or for your indicator to pop, or whatever. I'm going to get in there. That's what I'm going to do, and that's what I'm going to do, period. But hey, it's selling. Your bias is a buy? Cool. Take the buy intelligently. Oh, but right here, you took the buy. How did you know it wasn't a buy here? I didn't know. I didn't care. There's the difference. Because when I measured from here to here, it wasn't worth my risk to reward. When we were supporting here, I looked at it and I said, maybe we could get in there, but it wasn't worth my risk to reward. It was too close to the high. It was too close to the area that was going to impede my market, possibly. The possibility of it wasn't worth my risk. I didn't care. I didn't care. Oh, but it went 50 pips without you. Doesn't matter. Oh, what about why didn't you take the sell? Doesn't matter. Why don't you hold the buy and then also sell? Because I don't want to. It is a crazy thought, I understand, to give away pips. But ask around whether or not this idea of I gotta get it all actually works. There's not many people out there. There are obviously people who probably do it. But there's way more people in the graves of Forex with blown accounts and destroyed egos. Because they couldn't keep it simple in the beginning. You could go a million places once you have your foundation and that understanding that you can do this, that you know what you're doing, that week after week you catch trades, and week after week when something goes negative, I lost a trade today. Yeah, here we go. GJ, which is one of my other babies when it comes to how, pairs that I trade all the time. GJ, I had to drop at -20. I did take the buy. I ended up breaking one of my own rules. Okay? Now, with GJ, I ended up taking an L. But guess what? -20. It already had skimmed out 20% of it because I was up like 25, 30 pips. I didn't like the way things were moving. And then it went negative on me. And like a dummy, I didn't place my +1 like I should have. Ego, right? I was up hundreds of pips up here. I was up 300 pips, and this one, ego. That's ego. That's ego. I'm human, just like you. So guess what? Take that L, Gustavo. Boom. I'm out of there. It's going to happen. But you know what I didn't do? I didn't add entries. Let's go to GJ. I didn't add entries. I took right here. That's where I took the buy. Okay? Now, guess what could have happened? The beginner, the newbie, the person that doesn't plan, guess what they do? Okay. It's here then, right? This is marked up. Let's say this is your markup. It's here. I'm going to add entries. It's here. I'm going to add entries. And then this thing ends up going 100 pips, and you're in trouble. And you're closing the week negative. And now it's the weekend. And now you don't know what the hell to do. All right? Mistakes happen. Losses happen. How you manage it is the skill. How you get yourself out of that negative situation is the skill. The good and the bad, how you manage through that, plan it, execute it, day after day, week after week is the skill. How you draw cute little boxes and cute little lines, not the skill. Part of the skill, but not really. Not really the chunk of the skill that really matters. This stuff, definitely not easy to learn in the beginning, but you will learn it. You're in this game long enough, you'll learn enough that you can maneuver through the market. Are some better than others at technicals? Yeah. Some are better at deciphering details and they see things earlier, and they're better at certain patterns, and they're better at certain things, and their strategy allows them to see some stuff better than other strategies, and it's kind of a give and take, right? It's kind of a give and take. But what's really going to separate you from profitable, Jesus, the questions don't stop. Well, from profitable to the person who's getting destroyed by the market is the way you approach it, your psychology, what's in between your ears, your planning, how you execute. That's what's going to matter. That's what's going to matter. So we take it back to gold. What did we learn today? Plan your trades. What did we learn today? Plan your exit. What did we learn today? Plan your partial profit. Plan. Your markup, my markups, I don't know about your markups, but my markups are reminders to not forget to do certain things. My markups are reminders to don't mess around with that idea that you're about to have because it's not working. So avoid the headache. Don't even get in. Leave it alone. The little things that I do as far as timing, the use of Fibonacci's, and yes, I do use Fibonacci's. I barely talk about them because it's just too much for people out there. They can't even do this. That's why I don't throw in quarter theory. I don't talk about descending channels. I don't talk about easy patterns, flag patterns, things like that. I don't talk about stuff like that because many of you that are watching this right now can't even do this. I've worked with enough people to know that I could tell them that I'm in the market and they'll still micromanage their way out. Why? Because there's about 10 hours here of time where I said I'm in. And there's about 10 hours of time where they're thinking to themselves, I wonder if he's still in. I wonder if, and they start to make it up for themselves. Maybe it's a sell. Maybe it's a sell. They'll go to that 1 minute chart and they'll start to look if it's a sell. They'll draw 1,000 trend lines that don't make sense. They'll do a bunch of shit that'll make them believe that it's a sell and they'll take that sell. And in the whole time, they want it to be in a buy. But no, the time, the staring of this chart, taking your eyeball and putting it right to the screen is going to be the death of your trades. So if you skimmed all the way to the end of this video, this is what you're going to take from this video. You plan your trade. You plan your take profit. Okay? How do you do that? Analysis. You enter the market. Once the market it's either negative or positive, you manage it accordingly and you let it play. Don't think for the chart. You're not that good. I'm not that good. No one's that good. What makes you good, what makes you skillful is how you maneuver through the movements of the market, whether good or bad. So a trade like this, I'll tell you right now, yeah, it makes me feel damn good. But you know what else makes me feel good? An early cut. Like this one. Where I could have easily held it. I have more than enough in my account to hold that with no problem. More than enough. Especially if what we think is going to happen happens. More than enough. That I don't have to take that out. And I could hold this thing to down here and I'll be fine. But I didn't do it. I cut it right on time to avoid headache. That makes me feel good too. It makes me feel like my skill is nice and intact. So go out there, guys and gals. Go out there. Plan your trade. Stick to your bias. Pound your chest a little bit. If you got somebody who's telling you that strategy doesn't work, who cares? If it works for you, it works for you. If you got somebody telling you, yeah, I took the up, I took the down, I took the up, I took the down, I took the up, maybe they're on the computer all day. I'm not willing to do that. If you follow me on Instagram stories, at Gustavo Zaps, you know I live my life. I got a family I love spending time with. I love to go to the gym, lift some weights, pull some weight, box. I love it, man. I like to be outside. I don't want to be on the computer. That time is gone. When I was learning, I used to do that, and I used to do the long hours and the 24 hours, and I'm a maniac, okay? But those days are gone. They're done. They're done. Now, I give out the setups that I'm going to do. Obviously, you see it works, but I also have to understand that I can't take them all. And a person who believes that is usually not somebody that you want to trust. That's just the way I view it. So try it my way. If you're not getting the results, that you want, try it my way. It's at no charge, at no cost. What you're doing right now may not be working. Maybe what you're doing right now needs improvement. Give it an adjustment. Try it my way. If it doesn't work, it doesn't work. What do you got to lose? What do you got to lose? The same results you're getting right now that if you're watching this video, you're probably not happy with? And that's that. As always, guys, much love, and I appreciate your support on Instagram and on Facebook. I appreciate it. I appreciate the love that you guys send out, letting me know that you're watching stuff and it's helping you and all that good stuff. That's why I make these videos. It's a thank you. It's a thank you. Other than that, I want to wish you guys a great rest of 2019, and I want to make sure that you guys understand that this is a long process and a long journey, no matter how good you get. So fall in love with the game. You got to fall in love with the game of trading. If you're not in love with this game and you're only doing it for some sales, or you're only doing it just to look good online, like you're doing something, like you're stuck in the Matrix and you're Neo typing on this computer with all these cute little lines on it, you're in it for the wrong reasons, and you probably won't last. You got to love what you do in order to survive the process. You got to be able to do this for free for a bit. It's the truth. All right, so focus on the skill of trading. Sell all you want, do what you want, whatever makes you happy. But never forget why you're here. You're here to learn this. No matter if you're in an MLM, you got another coach, you watch YouTube videos, you steal other people's training, no matter what it is you do out there, you're here for one reason, right? That's why you're here, to learn how to do this. So give it its time. If you spend an hour of selling, spend 3 hours of learning how to do this. All right? You'll make more sales if you actually know how to rock these charts. You'll make more sales if you can actually teach somebody how to work these charts. If you're actually profitable, if you can prove you're profitable, if you can prove you're consistent, if you can prove that you can get this done, sales come. They come no problem. But when you spend more time trying to convince than actually do, you got a problem. Love you guys. As always, happy trading. Don't forget, at Gustavo Zap, subscribe, like, love, keep it sexy.